whilst all the eyes in the West were on Greece as its marxist Syriza government played Game of Thrones with the Greek people's lives as they blackmailed the Eurozone. The Chinese stock market crashed, collapsing by over $2 trillion in wealth into a bear market, sending over 200 million Chinese retail investors into a panic as they got a bitter taste of the dark side of capitalism, of what happens when investors believe the hype that stocks can only go up, as we have seen countless times play out before. The Chinese market, as measured by the Shanghai Composite Index or SSCC, peaked in mid-June at 5178 and then entered into a severe 3-week-long downtrend with limit down moves and stocks freezing, locking panicking investors into losing positions. The SSCC finally hit a bottom of sorts at 3373, down 35% after heavy government intervention before bouncing for the last few days to 3877, up about 15%. I'll come back to what this means for China and the Western stock markets later, but first the Greek collapse. The people of Greece need to be reminded of what is written on the Temple of Apollo at Delphi. Know thyself, because the Greek people for several years now have increasingly become detached from reality. Syriza has presented a bailout proposal that is worse than what the Greek people rejected on 5th July. The Syriza game theory players' 6-month-long intensifying blackmail of the Eurozone that culminated in the no referendum vote to the previous bailout package from the evil Troika, who according to Syriza were financial terrorists hell-bent on the destruction of Greece, to which end only Syriza were the Greek people's saviours who would prevail with no austerity over the evil Troika. However, as I've consistently pointed out for the whole of the past 6 months, that all of it was a delusion. Not one of the Syriza game-playing theory so-called experts who kept raising the ante in their blackmail of the Eurozone, but of a crackpot Marxist Syriza that basically believed their own propaganda, which first detached them from reality and then slowly 60% of the Greek people, where the truth was the near polar opposite of the picture that Syriza has been painting of victimhood, of the debt, deficit, bailout, austerity and the evil Troika, none of which was true. The magnitude of the Syriza deceit is further laid bare, for amongst all the talk of Greece being under an unsustainable debt burden that is being forced to service, the truth is, as I've often voiced since Syriza were elected in January, is the exact opposite, as the truth is one of a Greek state living far beyond its means that is reliant on a subsidy from the Eurozone that has averaged Euro 70 billion per year. Understand this, Greece has made no debt or interest repayments for the duration of the past 5 years, for all of the payments have been financed by the Troika. Instead, Greece has enjoyed a net inflow of approximately Euro 20 billion per year. That's Euro 100 billion towards sustaining the corrupt Greek government's public expenditure voter bribes projects. The latest on the Greek crisis is that a severe austerity program has been agreed to in exchange for a 3-year Euro 86 billion bailout if the Greek Parliament votes in favour of it by Wednesday, which means it is not all a done deal yet, especially as the TV coverage continues to expose the magnitude of self-delusion in Greece. Again, my message to the people of Greece is, know thyself. Whilst it does look like the Eurozone will kick the Brexit can down the road for a few more years, However, my consistent view remains that Greece has no choice but to exit the Eurozone, which it will do sooner or later. The first thing that stands out from the China price chart is that despite the 35% bear market, the Chinese stock market is still up about 15% on the year to date, which highlights an important factor when considering the true state of a market rather than deferring to arbitrary rules such as a 20% drop means it's in a bear market. Well, no, not if the market has rallied by 150% during the preceding 12 months, which is the case for China's textbook stocks bubble. Therefore, for long-term investors in China, the collapse is not that bad. However, don't jump the gun and start contemplating this as a buying opportunity. The truth about the recent crash is that China has given up about half of the gains of the preceding 12 months. And as a long-term investor, such a move in the context of trend would not faze me, which begs the question, why the panic in China? Well, obviously because they weren't actually investing but gambling on leverage. For the more detailed analysis, see the source article linked above that includes investor psychology, Chinese government intervention, stock valuations, technical analysis, MACD indicator analysis, and of course Elliott wave theory. Pulling all of the threads together implies that the current rally is corrective, following which the Chinese stocks bear market looks set to resume with a vengeance, with the SSEC targeting 2,500, which is quite some distance from its last close of 3877. As for what happens after 2,500 is less clear. I am leaning towards probability favouring a dip to 2,500 being a panic spike low that soon reverses higher and resolves to a base building pattern between 3,000 and 3,500 for the remainder of 2015. However, if the spike low rally fails, then that could yet trigger further panic that plunges the SSEC into a deeper trading range of 2,000 to 2,500 for several years. So the bottom line is that there is far worse to come for Chinese investors. In fact, the China bear markets may only be half done. So will the Western stock markets, such as the US and UK, follow the Chinese stock market off the edge of a cliff? As there is much worse to come for Chinese stocks. Well, the starting point is to look at the degree of deviation from my existing long-standing forecast for the Dow for 2015 that acts as a roadmap against which to measure strength and weakness and thus adjust positions accordingly and undertake further in-depth analysis if necessary. Having reached the final destination of this analysis, my forecast conclusion is for the Dow to spend the first half of 2015 in a wide volatile trading range that will set the scene for a bull run to have started by early August that continues into the end of the year, punctuated by an October correction low. I further expect the Dow to be trading well above 19,000 during December and probably spike above 19,500 before closing at around Dow 19,150 for a 7.5% gain on the year. The bottom line is, don't be frightened by first half weakness. And my more recent analysis of 30th of June 2015 reaffirmed my expectations for continuation of the stocks bull market to a new all-time high following an imminent low at around Dow 17,500. Subsequently, the Dow did trend lower to 17,500, following which it has been attempting to make a base in the face of China collapse and Grexit that has seen the Dow rally by 300 points to 17,760 which is virtually exactly where the trend forecast over 5 months ago stated where the Dow would be by now. Therefore, without any deviation from the forecast trend, then at this point in time I do not see any reason to conduct a more in-depth analysis, as despite China's bear market likely to resume in the near future, instead the Western markets such as the Dow could march in the opposite direction to that which the consensus would expect the stock markets to do. Wow, that's definitely going to leave many analysts scratching their heads as they watch the US stocks soar and Chinese stocks plunge, who with the benefit of hindsight will find plenty of reasons why as they look back in their rear view mirrors several months from now, writing reams and reams of highly convincing gobbledygook, or to vegetate in a state of denial as they wait for the crash to come. Ensure you are subscribed to this YouTube channel to be informed of new videos and releases in our special project on the illusion of democracy and freedom that seeks to answer questions such as, did God create the universe?